Well, hello again, everybody, and welcome to another special weekend edition podcast with everything that's going on in the precious metals world and in the world at large. I thought, what a great time to get to visit once again with Marin Katusa. Marin, as most folks know, is not only chairman of Katusa Research, he's a New York Times bestselling author and one of the most popular fund managers in Canada. And it, like I said, could not be a better time to check in with Marin. So, Marin, thanks again for spending some time with us here at TFMR.
Oh, it's a pleasure.
Well, I'll tell you what, let's just dive right in. It has been a rather eventful couple of weeks in the metals. It seemed like price was broken down through the 50-day moving average and then through the 100-day moving average. And all of this action last week was done while China was closed. Just wondering what kind of thoughts you have on what we've experienced these last couple of weeks.
Well, that's part of it, but it's never only because of it. You had the big move because of Brexit, and people realized the risks. You got the, negative interest rates globally. You got the currency factor, and I think that was the big calling card. When you look at, the Western world, the Asian markets, when they saw the Brazilians get affected with their currency, well, if it happened to Brazilians, it doesn't necessarily mean it's going to happen to us. When they saw the Russians get, slaughtered with their currency, people in the Western world said, yeah, but those are the Russians. It's not going to happen to us. But when they saw the pound fall the way it did, it reminded everyone, it can happen to us. So that was a big, big calling card. It was a wake-up call for everyone. That got the gold going back to, finding its upward trend. And just like any market, Greg, this is just a natural pullback. We're going into an election. There's a lot of uncertainty in the market. There's a lot of what's the Fed going to do. The U.S. dollar is so important to understand. And that's the thing, a lot of people who focus on the gold markets, it's almost as if they hate the U.S. dollar, but rather than hating it, you have to understand it. And that's part of what's going on globally here. So the success of gold, you have to understand what's going on in the U.S. dollar. And right now, we're at an inflection point. And sure, this is a great time. Like I've been telling all my readers and all my subscribers and everyone in my fund, I expected a natural pullback. Will probably go a little bit lower, but that's a great buying opportunity. And if you have a longer-term horizon, this is a great time for the best companies who are cashed up with the smart management teams to take advantage of the situation. Nothing moves up in a straight line. You're always going to have the market sellers and buyers, and there's that tug-of-war between the bulls and the bears. But the trend is in motion. We are in the early stages here, and I'm very excited.
Let's talk about the dollar for a second before we get to the miners, because you're right in pointing that out. And here at TF Metals Report, we've talked a lot about how it seems like all of this Fed goon job owning is about keeping that Forex porridge just right, not too hot, not too cold, get the dollar to kind of stay in a trading range. Is that what you see as well? Is that what this is all about? Do you expect a rate hike before the end of the year, as so many are now starting to speculate?
A very small rate hike, but when you look at what the Japanese are doing, look what's going on in Europe, a very small rate hike is what I do expect after the election. It ain't going to happen before the election. And it's going to be, depending on which way the election goes, there's a lot of uncertainty here, but one thing that people do recognize is you'd rather own the U.S. dollar than the euro. You'd rather own the U.S. dollar than the yen. You'd probably rather own the U.S. dollar than the Russian ruble or the Chinese currency, the yuan. So there's a lot of wind in the sail of the U.S. dollar also. So, gold is a big part of my portfolio, but so is U.S. dollars.
Yeah, I understand that. I can see where you're coming from. It's interesting. You mentioned the miners earlier, and after rallying so strongly for the first 6 or 7 months of this year, obviously they've given back quite a bit, and they actually began to tip over back in August. And now we see the metals following through on this kind of toxic stew that you've mentioned of all these different events in the world. How do you feel, though? You mentioned some of these miners now coming down to compelling valuations. Are you feeling rather bullish at this point and looking for some bargains?
Definitely. And just like in anything, you have to warn your viewers that, in a bull market, a lot of junk goes up too. But in a bear market, some of the best companies come down with all the junk. So the key is, just like Pareto's law in anything in life, whether it's athletics or economics, you have to just focus on the top tier and start with excellent people, with excellent projects in safe jurisdictions that the country's not going to steal the asset from you. And that's something that I've been trying to warn people is, as the global economy slows, which I expect it to, which means the only way most countries can stay competitive is to devalue their currency, which is very bullish for gold. And in a market of global negative interest rates, remember, 1/3 of all global bonds are negative. The laws of economics are being rewritten, but one law that it won't be rewritten is the thousands of years proof that gold is money. So just like gold is proven, stick with the proven management teams and you will do fine.
It's funny. I remember talking earlier this year about it's been so long since we've been in a bull market. It's 5 years that we were down from 2011 to the end of last year. I think most people have forgotten that it's often 3 steps forward and 2 steps back as you go higher. It does make for some opportunities now at this point. As one of the top money managers in Canada, I bet you've got at least a couple of stocks that you think are the most compelling. You got any names you can share?
Well, I'll share one with you that guys I've been very lucky that I've worked with and been mentored with some of the most successful people in our industry. Like the Warren Buffett of our industry is a guy named Rick Rule. You have guys like Doug Casey, who've been a mentor to Rick Rule, who's my partner. So I've been very lucky to learn and work with the best. And one thing they've always taught me is, the factor of the Pareto's Law, investing with the right people. And for everyone, they need to look at, okay, how much of this company does the management own? What is their cost base? And that's what I really like about one of the largest holdings in our fund is a company called Brazil Resources. The ticker symbol is BRI. And I created something called GPS. And I'm going to explain something. If Warren Buffett was to invest in the resource sector, how would he go about it? Well, he looks for value. And what is a share? When you go and buy a share, it's a piece of the company. You are a shareholder, just like the management team. And sure, you can raise your exploration and find some gold, but is your share of the company's net value increasing or decreasing? And what I'm most excited about Brazil Resources, a company called BRI, and the name's a bit wrong because they got incredible assets in the U.S., in Colombia, in Brazil, and also in Canada. So I expect some near-term catalysts with the name change, maybe selling some assets. So there's a lot of near-term catalysts. But they've actually increase the value per share the most of any publicly traded company. If you're a shareholder, not the share price, but the actual value of your gold exposure has increased by almost 500% since January 1st, 2015. No other company in the market is anywhere near. And I'm comparing this to the top companies in the sector that have market caps multiples of BRI. That's when management who own over 10% of the company at current prices, and they keep financing the company, that's what you look for in the company because they are shareholders themselves. So you find that formula of the right management team with world-class assets, your value is going to increase. And a big worry in the resource sector is being diluted. The opposite has happened for us, and that's why we backed this management team, and we're so excited about the future of this company. They've been the number one performer on a GPS metric, and we expect the trend to continue.
Are there other names that kind of fit into that same category, do you think, Marin?
For this metric on the gold per share value, no other company on the exchange even comes close.
Wow.
The next company increased it by about 180%, but BRI, a company run by Amir Nani, is just under 500%. So on that metric, no, and that's why we've put tens of millions of dollars behind this company. So when a lot of people listen to, gurus or any of that, first of all, I don't believe in gurus. I believe in guys who write stiff checks, put their money where their mouth is, and hopefully they're right. A lot of times, the markets are vulnerable, there's the timing issues, but you follow, I can't emphasize enough, you follow the smart money, and you find guys who are life and industry, and what their shareholding is, the assets, safe political jurisdictions, and you will do well. Now, the share price could go up 20 cents today or go down 5, 10 cents tomorrow. That's not really what I'm looking at. It's the value per share, and are they doing the right things? Now, another metric I look at is how much gold does it have? Now, of the whole universe of the development companies in the publicly traded, not just in Canada, in Australia and London, they are in the top 5 of ounces in the ground. They have over 18 million ounces, 43,101. Now that metric means that an independent third party valued all the drilling, and it has 18 million ounces. Now what does 18 million ounces of gold mean? Well, they're in the top 5 in the whole world. Secondly, when you look at how much would it cost to drill, well, it'd be over $600 million. 600 million US dollars have gone into exploration and drilling those assets, and Amir and his team at BRI have gone in and picked up these assets in a down market. Hence, when you say, where are we in today's market, that's why I'm so excited. This is a smart, savvy team that have put millions of dollars of their own money into this company to go and increase their GPS, the gold per share value, and now they've gone, when they started, to over 18 million ounces. And in every metric, they're number 1 in the exchange. So that's why we're so excited. And another thing I warn people is you don't need 40 gold stocks. Why? That's like buying the exchange. Pareto's law will tell you that 80% of your returns, okay, will come from less than 10% of your portfolio. So focus on just the best in the market who are best leveraged, and I'm very bullish on the price of gold in the long run, and that's why we have tens of millions of dollars behind Brazil Resources.
Yep. And, and for everybody out there that's in the sector, gosh, just do your own due diligence, do your homework, look around, and you'll find companies like that, gosh, hard to beat. While I've got you on the line, Marin, I want to ask you one last question, though. You are, as I mentioned, best-selling author. Your book that you wrote for almost 3 years came out then in 2014 called The Colder War. We here at TFMR spent a lot of time and have spent a lot of time since early 2014 chronicling this new Cold War, whether it's on the front in the Baltic states or in Ukraine or now in Syria. I'm sure you stay on top of the situation, Marin. What do you think at this point? Is it getting out of control? Have you been kind of nervous, or is it just all part of this new Cold War and all the bluster that goes with it?
Well, it's the continuation of the Colder War, as I call it. You look at what's happened since I published the report. You continue seeing. I remember I was debating the host of on the CNN. And he didn't understand. He just assumed that Russia would fall on its knees, that its currency was weak, and it's over. And I said, no, you don't understand. It's not just Russia who's going to create their currency. All countries are going to devalue their currency relative to the gold standard when you speak of things. But that just makes their exporting their commodities, their oil, their natural gas, their uranium so much cheaper because their cost of production decreases so they can now stay competitive. The host of CNN didn't quite understand that, and I was trying to explain to him. Also, you look at NATO's expansion in the region, that's not going to be a quick fix. And he said, sure it is. The NATO is going to come in and step all over Putin. I go, no, they won't. And Crimea is a great example. You look at what's going on in Ukraine, it still continues to be an issue. Look what's going on in Syria. And the reality here is that there really is a shift. And because of the emerging markets, because of the debt in U.S. dollars of the emerging markets, there's been a major transition where the European countries have their own issues with their banks. Germany has a serious issue with Deutsche Bank. You look at the Italians have a banking crisis, the Spanish. Europe is a basket case right now, and Brexit was just the first domino to fall. You look at the election going on in the U.S., Donald Trump is a reflection of what the tension is in the country, and the failed foreign policy of the current administration has created all of these things. Donald Trump would not be where he is in this election campaign if it wasn't for the failed foreign policy and even their own domestic policies. And moving forward, Putin's still sticking to his mandate. You look at what's going on globally with their coalition with China. You look at the Silk Road. So the emerging markets are continuing the path that they've set many years ago, and unfortunately, the allies of the West are stumbling upon themselves. Japan has their own issues. So the strength in this battle, we get one-sided view in the West, but Doug Casey and I, we traveled to over 100 countries, and you get a different perspective. You look what's going on in Africa. Unfortunately, the situation is going to get a lot worse before it gets better in the colder war. But again, this is very bullish for gold, and that's why we love the future for gold.
Yeah. And along those lines, how much do you worry about it eventually tripping into some kind of hot war? Is that a concern?
Look what Putin just did. He pulled the plug on the plutonium agreements that they had between Russia and the U.S.
Yeah.
That is a serious signal. Yeah. Secondly, he said, "Oh, and by the way, I don't like you guys have you basically have failed in your international agreements, so we're going to pull this agreement." Secondly, we also end the coalition in research. What's next? The LEU program. Remember, 10% of America's electricity generation, 10% of America's homes get powered by Russian-sourced nuclear fuel. A lot of people forget that, right? So more Russian uranium produces than all of the windmills in the U.S. combined. So Russia is important to keeping the lights on in America. But that's changing. Russia is realizing that, you know what, they can't work with. And do you really think that the Americans and Russians working together couldn't solve the ISIS crisis?
Yeah.
Of course it could. Turkey is an example of a failed coup. Information's coming there. What happened there? What's going on? And ironically, Turkey, I was using Turkey as a potential trump card for the U.S. and the Russians to work together. But Turkey really pulled an interesting comment, and they reached out to the Russians to work closer with the Russians. That was something interesting, because if you recall back in April, May, and June, the Russians and the Turks were at each other's throat.
Yeah.
So, things are moving very fast in the foreign politics, and unfortunately, the Americans are losing in this foreign policy war.
Yeah, and like you said, it all augurs toward continual accumulation of physical precious metal and even a few mining shares.
You get incredible leverage. You see, people invest in these mining exploration development companies and production for leverage to the success of the price appreciation of the actual precious metals. Precious metal is great. Precious metal is more of an insurance policy, and it's also a form of money to protect your currency devaluation. But you invest in the equities of these development companies for massive leverage. So if the price of gold goes up 50%, the price of these development companies will go up 5 to 10 times. That's just how it's always been, and it always will be.
Yep. Marin, it's always a pleasure to speak with you. You've got so many terrific insights, and you're knowledgeable in so many different areas. Katusa Research is where people can find you, katusaresearch.com.
You bet, and I provide a weekly free report on all my insights and research. So if people want to come, it's there, and hopefully they enjoy the insights.
And right on this page is a link to Amazon, so everybody can purchase a copy of The Colder War as well. Marin, thank you so much for your time. It's always, like I said, great to hear from you, and hopefully the next time we speak, prices will be going up rather than down.
I think they will be. Have a great weekend.
All right, you too, my friend. And thanks, everybody, for listening.